I'm Josh Coleman. I'm the founder and CEO of Momentum Advanced Planning. After starting my career at Morgan Stanley in their AIP group, I transitioned to do financial modeling and analytics for Towers Watson in Chicago, and then transitioned to help my family and others with advanced planning. Premium finance is the purchase of life insurance with dollars that are borrowed from a lending institution. Premium finance typically leverages a trust, brings borrowed money from a lending institution, and combines it with contributed capital from the insured to create money in a trust outside the insured's estate to purchase a life insurance policy which credits according to the performance in the index like the S&P 500. Premium finance index universal life insurance is made up of three components: legal, insurance, and investment. First, the legal component is typically a trust that owns the policy outside of the insured's taxable estate. Second, the lending brings money borrowed from an institution into that trust in order to purchase the policy. That money is typically borrowed between a spread of 1 and 1.7% above 30-day LIBOR. Third, the investment component takes those dollars borrowed from the bank, invested in the insurance policy, and grows them subject to the return in an index like the S&P 500, typically with a cap annually of 13% and a floor annually of 1%. On the individual side of things, the most ideal client for Premium Finance Index Universal Life is a family or individual with a net worth north of $20 million, or someone who makes over $2 million per year. Typically, these strategies are reserved for families or individuals with net worths of $75 million or over, however, can be adjusted to fit that $20 to $75 million range. On the business side of things, the type of firms that typically provide these vehicles for their key employees are closely held businesses with highly compensated employees making $1 to $2 million and up per year. The types of firms include RIAs, professional service firms, law firms, private equity, hedge fund, etc. The reason that Premium Finance Index Universal Life Insurance makes great consideration as part of your potential overall portfolio is due to the fact that inside the policy you have the inability to do less than 1% with a 13 or sometimes higher percent cap on performance. The ability to leverage that outside of your taxable estate with cheap borrowed money gives an unbelievable tax-free IRR to the owners of these types of strategies.